So let's start with our panel. Europe is leading the way for years when it comes to the share of AUM that are managed integrating ESG considerations. Following the work of the technical expert group, we also see strong leadership from the European community to implement a very comprehensive sustainable investing regulatory agenda addressing every stakeholder of the investment value chain. Yet, as sustainable investing is benefiting from global tailwinds, we also see some significant evolutions in other geographies. China has committed to become climate neutral by 2050. Australia and New Zealand are also very active when it comes to TCFD requirements. And some gear change is to be expected in the US following President Biden's election, as evidenced by recent Fed and SEC announcement. Is there such a thing as the European approach to ESG? If yes, will this specificity prevail over time? How much of the European sustainable investing DNA is led by regulation? How much by investors themselves? To answer this question, it is our honor today and pleasure to have to welcome three eminent panelists. Susanne Draeger. Hi, Susanne. Susanne is a senior policy analyst working on the EU policy at the UN-supported Principle for Responsible Investment, PRI. She's been working on sustainable finance policy at EU and member state level, as well as multilateral level for several years now. Previously, Susanne worked as a policy manager for a non-profit environmental disclosure platform. We also are very honored to welcome Claudia Kruse, Managing Director, Global Responsible Investment and Governance at APG. Hello, Claudia. APG manages pension assets of circa 515 billion euros as of April 2020 on behalf of Dutch pension funds. And Claudia is part of the management team of the investment function, reporting into the Chief Investment Officer on the board of APG Asset Management. The 20 people strong global responsible investing and governance team based in Amsterdam, New York, and Hong Kong safeguard the implementation of the client's responsible investment policies across all asset classes. Before joining APG in 2009, she worked on the buy and sell side in London for almost a decade. She's an experienced non-profit board member and served on the board of the International Corporate Governance Network. Since 2016, she has been appointed to the German Corporate Governance Code Commission, and she was a member of the EU expert group on sustainable finance. Last on our panel, Thierry Déau. Hello, Thierry. Welcome. Thierry is Meridiam's chairman and chief executive officer of Meridiam. He founded Meridiam, an independent investment firm recently transformed into a benefit corporation, so walking the talk, as Sebastian just mentioned. Financing a benefit corporation specialized in the development, financing, and management of long-term and sustainable infrastructure projects in 2005, with the belief that the alignment of interests between the public and private sector can provide critical solutions to the collective needs of communities. Managing 8 billion of assets, the firm has to date more than 80 projects under development, construction, or in operation. Meridiam currently holds offices in Paris, New York, Toronto, Istanbul, Addis Ababa, Dakar, Luxembourg, Amman, and Vienna, and is a leading investor in public infrastructure across Europe, North America, and Africa. Thierry is also the president, chairman of the French Sustainable Finance Cluster, Finance for Tomorrow. So let me start with the first question to you, Susan. The compatibility of ESG integration with the fiduciary duties has been a much debated topic for years. Answers to that question have somehow driven differently the development of sustainable investment in different geographies. The PRI has undertaken a comprehensive project called Fiduciary Duty in the 21st Century over the last years. Can you tell us how you see Europe differentiate on that question?
Yeah, first of all, thank you very much for having me today and to be part of such a distinguished panel. And thanks, Rodolphe. It's a very good question to kick off the conversation, I guess, and something the PRI has been working on for years now, really. ESG integration is actually one of our principles investors sign up to when joining the PRI, and the integration of ESG issues into investment practice and decision-making is an increasingly standard part of the regulatory and legal requirements for institutional investors. And this is something that indeed was outlined in our final report on fiduciary duties in the 21st century, which we have published last year. The report has also shown that investors that fail to incorporate ESG issues are failing their fiduciary duties and are increasingly likely, increasingly likely to be subject to legal challenges. And fiduciary duties really require ESG incorporation. This is how PRI's view on ESG incorporation is. And however, capital markets remain unsustainable and they are currently defined as fiduciary duties. They are not really requiring a fiduciary to account for their sustainability impact of their investment activity beyond its financial performance. And in other words, what I want to say is fiduciary duties require considerations of how sustainability issues affect the investment decision, but not how the investment is actually affecting sustainability issues. And the Paris Agreement and the Sustainable Development Goals have been significantly raised awareness within the investment community of global sustainability challenges, although there is more that needs to be done to really incorporate those. And coming back to Europe, I think the regulation on sustainability related disclosures in the financial services sector, the so-called SFDR, sets a new and wide-ranging disclosure obligation relating to the so-called principal adverse impacts of a whole firm's investment, really. And the SFDR is of additional relevance also as it is a disclosure framework really based on established environmental and social due diligence guidelines for investors. And as such, I think it represents a framework for identification and prioritization of impacts, as well as establishing routes to mitigate the adverse impact. And if necessary, it also provides remedy for those affected. And however, the SFDR is a disclosure obligation, but it does not modify the core duties to require any firm to modify investment or stewardship behavior to mitigate those adverse impacts. And this is why the PRI is currently working within a project consortium on a project that is called a legal framework for impact, which will prepare and publish legal analysis as well as practical recommendations for investors seeking to assess and account for sustainability impact in investment decision-making as a core part of their investment activity. And this is what we see as the next generation of fiduciary duties, really, where responsible investors are beginning to measure, account for, and integrate the real-world sustainability impact of their investment activities.
Thanks very much, Susanne. So turning back to you now, Claudia, and following on Susanne's last remark, we've seen recently evolutions in investors' approaches to ESG, and there seems to be a shift from negative screening to more positive and output-based inclusion strategies. While impact investment remains marginal still in terms of asset under management, it seems gaining strong momentum, including in the US. So could you share with us how APG is positioning on these new trends and the needs for setting standards there?
Thank you very much for the opportunity to speak here today and provide some insight. We invest on behalf of Dutch pension funds, the largest of which is ABP. And they already in 2015 formulated a policy which was very much focused on what we want to have in the portfolio rather than what we don't want to have in the portfolio. So it's this positive, affirmative view of to whom do we want to provide capital. And that was very strongly linked also to the SDGs, which to the UN Sustainable Development Goals, which were published at the same time as the updated policy. And therefore we sought to align, and ABP formulated a target of doubling its investments into the SDGs by 2020, so over 5 years. And this actually triggered us, at the time, what did we know? They were the SDGs, they were formulated in a way targeted at policymakers, and we actually had to translate them into an investor context. And we developed jointly with PGGM, another Dutch pension investment manager, a definition that was supported by other investors and very much focused on the core business of companies. Do their products and services provide a solution to solving to advancing the SDGs? And this has been now on the go for a while. We started in 2015, and this year in 2020 in July, we actually set up the Asset Owner Platform for investing into the SDGs, the SDI Asset Owner Platform. And that was really driven by a common belief among like-minded investors that it is important to be clearly able to identify the contribution to the SDG, to have a common standard around that, and also to have the underlying data set available that can be integrated into your investment processes, because in the end we are investors and that's what we need it for. At the same time, the objective is also to generate greater credibility towards stakeholders if more asset owners and their asset managers use the same approach. And we are, of course, delighted that for our platform, Qontigo is the distribution partner for the underlying data for the standard. But for us, it's really crucial to make that positive contribution, to have it firmly embedded in the investment process, and to work with others collaboratively to help advance it.
Thank you very much, Claudia. Perhaps a quick follow-up question. So this approach to identifying companies that contributes to SDG is quite different from having an ESG score. And I believe that under the work that has been undertaken, you only find that a small share of overall companies and investable universe is actually having a significant contribution to the SDG.
Yes, indeed. It is really not focused on conduct. So how energy efficient the company is, or does it have a human rights policy or else. It's really focused on the core business, on the products and services. And there, of course, it's then based on financial metrics rather than sustainability metrics. And it's really a deep down analysis into what part of the core business contributes. And, by nature, we are fairly conservative and rather on the side of caution. And at the same time, the taxonomy that sits behind this is going to be continuously reviewed and updated to really be up to speed with market developments, scientific developments, etc., so that we can take account of new developments and also discard some products and services that are no longer considered a solution.
Thank you very much. Turning back to you now, Thierry, I believe that impact and providing a positive contribution to society is a key strategic focus for Meridiam, and that you've been also engaged in a collaborative approach to develop impact standard for infrastructure asset class. Can you tell us more about the framework that has been developed under your guidance?
Well, thank you. Thank you for inviting me today. This is a journey that actually started 8 years ago. I was just remembering, as Sebastian was mentioning, the efficiency curve, that our question at the time was, how does our ESG screening and policies and performance eventually impacting that efficiency curve? Of course, we haven't solved that problem. But what we discovered was that there's not enough sort of benchmark data. There was not at the time available, nor standards or methodology to actually be able to figure out the real impact of ESG performance on our asset class. And so therefore we've embarked into something further, going into impact and looking at impact as a SDG contribution. So we've actually developed two methodologies. I mean, one is more proprietary, and we've used a number of consultants that are well known on the market to do so, which is our SDG sort of overarching impact measurement. And that actually allows us for the infrastructure asset class, and obviously having done quite a lot of strategic work identifying all the different type of assets that we could have within this class and also contextualize this within each geography or sub-geography, having a tool that actually uses a big data system to manage the sort of questionnaire that we ask every asset and every portfolio company to fill up on a yearly basis. And that is actually providing us a pretty comprehensive ESG contribution picture of the portfolios of the assets, and we can actually provide our investors with a full picture of that together with financial performance. The second was more one that we've initiated with other industry participants in Paris, which is called the 2-degree challenge, which is more focused on climate. And that is really a tool that allows us to measure basically the gap with the Paris alignment. So basically the ability to measure the temperature of our portfolios. And that again had taken quite a bit of time to really analyze every type of assets and every geography in terms of what the trajectory is in terms of carbon avoidance or emission in order to benchmark such asset and then the portfolio in relation to the Paris Agreement alignment 2 degrees. So we now, and this includes people like the Agence Française de Développement or La Banque Postale generally, the EU Climate Knowledge and Innovation Community is also part of this, this initiative. It has all the features that are coming, like physical risk for climate, for example, so the next sort of feature that we're developing for that tool. But the temperature was quite a significant step over the past 2 years in terms of having this type. So these are the two sort of main examples, one very much being on the positive contribution into SDGs, and the other on climate, and having an ability then to adjust, manage, and optimize portfolios on those two new areas.
Thank you very much. So we see that European actors seems to be working on 2 legs. So there is the regulatory front and stream of initiatives, but also investor-led initiatives such as the one that Claudia and Thierry just described. Claudia, you've just explained to us how asset owner collaboration was helping to set standards. And one other domain where standardization is needed is on corporate non-financial disclosure. And this year, between July and September, it was amazing. We've seen not 1, but 4 different initiatives launched to come up with a standard for corporate non-financial disclosure. So the IFRS, the European Commission, the group of 11 NGOs, and then the WEF with the 4 big auditing firms. Can you tell us more about it, and what are your thoughts on this, and is there any of this approach that you consider more promising than the other?
Yeah, it's indeed remarkable how many initiatives there have been. And for us, the focus is very much on bringing them together and having some extent of convergence, while of course at the same time they need to be rooted in the right kind of expertise. Some of them fulfill different purposes, either disclosures focused at investors who are, I think for all intents and purposes, equally relevant for other stakeholders, and then some who are more focused on stakeholder disclosures. What I think, out of all the initiatives that have been launched, the one that we find most noteworthy was the move of the IFRS to issue a consultation around sustainability standards. And you may have noticed that many investors like BlackRock, etc., already responded positively to it. So we, of course, to be seen how it works out in practice, but that is a very, very important move that we've seen here.
Thank you. Thierry, I believe that Finance for Tomorrow has taken the lead to coordinate a collective approach to the non-financial reporting disclosure for the Parisian financial marketplace. Why did you consider this as a strategic issue?
Clearly it is a strategic issue for all of us because of the difficulty of the previous directive, and so we've supported very much the sort of update of this directive to really set the EU as a standard setter in sustainability, because I think that's a clearly strategic move for the EU to be the standard setter. I mean, we're talking about IFRS. The last time we got some imported strategies, we ended up with mark to market, which is a very non-European behavior. Therefore, it was important for the EU to actually take the lead and really push for this. So with a number of very sort of European, I would say almost philosophical issues there. One is, for example, the fact that double materiality is a very, very important topic within Europe, but that's not the only one. So it's also a question of how data eventually gets standardized and used. So there is a bit of a strategic use of the data and ownership of the data when it comes to sustainability. And therefore we've decided a couple of years ago to start moving in that direction and really supporting this. We've been very active in the consultation with the Commission on that matter, and really trying to make this a sustainability reporting standard rather than anything else.
Perhaps all our audience is not completely familiar with the concept of double materiality. So could you explain it in a nutshell?
Well, if I oversimplify it, there's the impact that you create and the impact that is created by the things that you create. But it goes a little further than that. just to make... it's a little bit when you, and I'm not sure people are specialized in carbon footprint as well, but looking at carbon scope 1, 2, and 3 is very different from looking at carbon scope 1 only, which is your sort of direct impact versus your indirect impact with your activity. So that's...
Yeah, so overall supply chain, holistic view of the impact. Susanne, back to you. How is the PRI addressing this race to set non-financial disclosure standards? And do you see any specificities and perhaps some advantages to the European Union, European Commission approach through EFRAG?
I think very good question. And yeah, just to follow up on what Thierry has said, yeah, in terms of non-financial corporate disclosure, I think we can all agree that the lack of high quality, relevant and comparable corporate sustainability data remains one of the central challenges investors are facing when they seek to integrate sustainability risk or work on sustainability impact and yeah, increase their contribution to sustainability outcomes. And what we have done earlier this year is we have been joining up with the World Business Council for Sustainable Development, the WBCSD, and have forged a new collaboration to create an enabling conditions for a sustainable financial system by facilitating this direct conversation between investors and business about decision useful, sustainability related information, what it is and how and where that information can be used and should be used. And coming back to the European debate in terms of EFRAG, we have seen the European Union, and you mentioned that earlier, Rodolphe, really has led the globe on sustainable finance reforms, and yet there is a clear and urgent need to better harmonize corporate and investor disclosure requirements to support the implementation of the Paris Agreement and the Sustainable Development Goals. And Europe has already incorporated these global goals in the EU Green Deal, the respective legislation such as the SFDR I mentioned earlier, the Sustainable Finance Taxonomy, the EU Climate Law, and there's also an upcoming initiative on sustainable corporate governance. And all those initiatives, we believe, need to be supported by a non-financial reporting standard. And that's why we are fully supportive of the development of a European non-financial reporting standards, because as I said in the beginning, Europe is really leading the way, and the IFRS approach is something we are very much welcoming, but it's for now, as far as I'm concerned, looking at climate only. And yeah, of course, PI is also taking note of all the different initiatives and reporting standards that are aligning, popping up, and we see new developments almost every day. But we believe it is important to start with setting overarching goals for such a overarching disclosure standard and make sure that desired outcomes of such a standards are approached first before we attempt to align existing standards and elements. And that should really be a second step, we believe. And yeah, we are working continuously with our global network of signatories, of course, to advocate for meaningful and globally comparable company disclosure and to promote the inclusion of material sustainability information alongside other financial data and encourage consolidation and harmonization of reporting standards and regimes.
Thank you very much. Sorry, Claudia, go ahead.
Oh, I just wanted to, for the avoidance of doubt, I did not mean to imply that the European efforts are not equally worthy. So we're strongly supportive of those too, but many of what you see is complementary, and IFRS moving into this is perhaps the most noteworthy in that it is a first.
Thank you very much.
Understood here.
Thank you for the clarification. At this stage of the panel discussion, I would like to remind you that this is an interactive panel that we would like to offer you the opportunity to ask your own question to panelists. So this should be quite easy using the app or the platform that you have on your laptop to attend the event. So you can ask questions globally to the panelists or to just one of them, and I will make sure that I will take care of them. And if we should run out of time to address all questions, we'll make sure that after the event, we will come back to you with some answer. Perhaps to follow up, waiting for the few questions to arrive, Thierry. So we've seen that there has been the creation of several sustainable finance or sustainable investment clusters in Europe, in Paris, such as Finance for Tomorrow, but also elsewhere. In Germany, the Green and Sustainable Financial Cluster, in London and other places. So could you tell us how Finance for Tomorrow is articulating or collaborating with these different initiatives?
Yes. No, I think on all the topics that we just mentioned, whether it's disclosure or whether it's just sustainability standards, part of sort of international, at least interoperability will be very much important. So we are part of the Financial Center for Sustainability that includes today around 35 members across Europe, but also across the rest of the world. And I think that's one of a very important tool that we use to sort of discuss, keep a dialogue open, and adjust in terms of you know, the influence on those standards. I mean, in the past, we've been very much involved on the TNFD on biodiversity in a fairly international basis as well. It's quite important to have this constant collaboration, because as much as Europe should take the lead, we should also make sure that we leave no one behind somehow.
Thank you. Claudia, during his introduction and welcoming speech, Sebastian mentioned that Dutch Börse Group had made a significant acquisition a few weeks ago when it comes to ESG data with the ISS deal. From your investor point of view, to what extent this question of location of ESG data provider as an influence? There's been quite a lot of acquisition from European players by US-based companies over the last years. So do you consider important to keep ESG expertise in Europe when it comes to developing ESG methodologies and producing ESG data?
So I suppose I would rather, I mean, it has to meet, you know, what is available in the market has to meet the need also of European investors. So if that can be assured, then that is what we would be focusing on. And perhaps from our side, the need is more, we don't buy into scores and rankings and ratings. We buy into the underlying data. And if we can understand what is underlying and that is accessible to us, then it is of interest to us. And that, you could argue, is in a way that is a choice that is irrelevant of where it is based. But I can see that perhaps for other parties, the concerns might be greater if they rely on methodologies that are provided, or that are, methodologies that are provided.
Yeah, thank you. Thierry or Susanne, do you want to follow up on that?
Yeah, I mean, I unfortunately I can't disagree with Claudia to create some spice in your debates, because I think it is quite important that the view of the asset owners in Europe, which represent quite a significant part of capital flows around the world, be actually heard in terms of the underlying data. And I think it's also a safeguard against sort of what I call SDG and greenwashing, to actually have the real data rather than just relying on ratings and rankings, because it's all very relative. So I can only support this approach.
Thank you. Susanne, you want to add something?
Well, not specifically to the debate of US American firms buying European firms or the other way around, but just on data, coming back to this topic, that at a point where we then have full access to all the corporate disclosure and the data points we need or investors need to make decisions in terms of sustainability, impact and outcomes, I think it will also become more important to engage with companies and also engage with policymakers on real economy policy, in terms of that the regulation is also providing the landscape really for investors to invest in climate-friendly organizations and corporations.
Thank you. follow-up question to you on another topic. Sebastian, in his introduction, quoted some report from PwC Luxembourg that has been released recently. And in this report, they highlight 2022 as a tipping point. So the year for which the taxonomy and SFDR in Europe are going to be fully implemented. And they think that after this year, we're going to reach some kind of new paradigm where ESG is going to become the new norm, and the differentiation between ESG or non-ESG might become irrelevant with a number of investors applying a ESG-only approach or having a systematic integration of ESG into their investment strategy. Can you share with us if you see this trend happening among your signatories at PRI?
I have to admit, I haven't read the report of PwC, so I can't come back on that one. But we see more and more investors joining the PRI. We have now reached a number over 3,500 investors signing up to the Principles for Responsible Investment. We see more and more working on issues such as climate. Obviously, I think we all have agreed that this is a hot topic, and investors and corporations, basically every stakeholder, is working on this issue. But we also see more uptake on human rights issues. Social issues will become more relevant and hopefully also more or better to measure with like the new data we will have in the future in Europe. I'm not sure to what extent 2022 with the application of the taxonomy and the SFDR will be the tipping point, because at the end those two disclosure frameworks, and that goes back to what I've said in the beginning, it's good to disclose your activities, but you also have to act, and disclosure is just the beginning, and it really depends on your investment practice.
Thank you. Perhaps to conclude, I mean, we've discussed during this panel how European actors were approaching this issue of sustainable investing and different ESG approach, standard settings, and collaborative design of different frameworks. So Europe as a whole is leading the way and really doing a lot. But as a final question to you all, if Europe were to do something more that you think is missing, Europe as the European Commission, a regulator, or Europe as European investors, what should that be? And what could be done that is not being done yet at European level that will bring the sustainable investing to yet a higher level?
Yeah, perhaps, if I could comment, what we see is that there are many great initiatives at EU level at the moment on sustainable finance, on the Green Deal, but also the Capital Markets Union. And for us, implementing the Capital Markets Union as proposed by the expert report and establishing stable regimes in the sense of investment practices and policies in member state countries will really help also to drive sustainable finance across Europe. So we see it as an interconnection and an interplay with other EU initiatives as well.
I mean, I would tend to as well support this, because the Capital Market Union is something that we've had for 2 commissions now and not much being done on it. So, so it's about time to move further. But on the sustainability aspect, I'm not quite sure Europe is missing anything, but we do have to make sure that the market is fully on board with what's being proposed. I mean, the taxonomy is going to take a while to become as efficient as we imagine it could be. I'm not quite sure there'll be a sort of sudden wake up in 2022 of everything suddenly being taxonomy compliant. I think ESG has already been mainstreamed because the asset owners have actually mainstreamed ESG to a great extent. And so we will need Europe to be consistent, but also to muddle through making all this operational rather than rushing it in a way. I'm not suggesting that we should slow things down, but I'm suggesting that we should do things right with the right consultation and involvement of investors and markets in the development of the various tools.
Okay, thank you, Thierry. Susanne, you want to have a last word on this?
Yeah, just very briefly, I fully agree with Claudia and Thierry, and I think what is needed still is a bit of policy coherence between the different legislative files we see, that they really go hand in hand through the investment chain, so to say. And I think when it comes to taxonomy, just as a final example, we have been testing the taxonomy with our signatories and have published some case studies that show it's actually working. And my recommendation to all investors out there is really just start using the taxonomy, start making some examples, and just get going.
Thank you very much. There is no further question coming from the audience, so I think we can wrap it up here. So it was a pleasure having you on this panel, and thank you very much for your availability and the great insight that you've brought together. And hopefully you will be able to stick with us for the rest of the investment summit. And on behalf of Sebastian and Qontigo, I want to sincerely thank you one more time. Thank you very much.
Thank you.
Thank you.
Thank you.